Welcome to the Deep Dive. Today we're going to do a deep dive into Piramal Pharma,
Oh, yeah.
a global pharma company with kind of an interesting mix of businesses.
Yeah, they really are all over the place.
Yeah, we've got their press release and their full financial report for the quarter and a half year ending September 30th, 2024.
Perfect.
So let's break down their performance and what's driving it.
Sounds good.
So let's start with the headline.
Okay.
17% year-over-year revenue growth, hitting 2,242 crore in Q2 FY25.
Wow.
But it's the profitability that really caught my eye.
Yeah, their EBITDA,
Yeah,
earnings before interest taxes, depreciation and amortization,
right.
gives us a clearer picture of their operating profitability jumped to 18%.
Wow.
That's a 150 basis point improvement year over year.
So they're making more money and making it more efficiently.
Exactly.
So let's unpack how each of their segments is contributing,
Okay.
starting with their CDMO business.
Okay, so their contract development and manufacturing organization segment is really where it's at.
Yeah.
They're seeing 24% revenue growth year over year.
Huge.
Huge tells us they're tapping into something big.
Yeah,
The increasing trend of pharma companies outsourcing their manufacturing,
right.
especially for complex drugs.
So instead of like building their own factories
Yeah.
and dealing with all the headaches,
Right.
Big Pharma is saying, hey, Piramal, can you make this for us?
Exactly.
Yeah.
And what's fascinating here is that Piramal isn't just riding this wave.
Right.
They're actively building the infrastructure to become a dominant player in this space.
Okay.
For example, that $80 million investment to double the capacity at their Lexington, Kentucky facility,
Huge.
that's laser-focused on sterile fill-finish capabilities, which are in high demand right now for injectable drugs.
Okay, so they're betting big that this trend of outsourcing complex drug manufacturing is here to stay.
For sure.
Now let's turn to their complex hospital generics segment, CHG.
All right.
This one seems a bit more steady as she goes.
Yeah. So CHG saw a respectable 9% year-over-year revenue increase in Q2. Okay.
Not as flashy as CDMO, but still healthy growth.
Yeah.
Their inhalation anesthesia products are doing particularly well, but both in the U.S. and emerging markets.
They also mentioned expanding capacity in India to serve markets outside the U.S.,
Yeah,
specifically their Digwal and Dahej facilities.
makes sense.
Seems like a smart move to diversify their reach.
Absolutely. But here's where CHG gets really interesting.
Yep.
They're not content with just being a generic drug manufacturer.
Right.
They're investing in differentiated and specialty products.
Interesting.
Basically, moving beyond the crowded world of basic generics.
Smart, less competition,
Yeah,
potentially higher profits.
exactly. They even have a pipeline of 24 new products,
Wow.
targeting a $2 billion market, aiming for that higher margin, less crowded space.
Okay, so we've got CDMO booming
Yep.
and CHG evolving.
Right.
What's the story with their India consumer healthcare business, ICH?
Okay.
That's their play in the over-the-counter market.
Right on. And it's performing well with 8% year-over-year growth in Q2. Okay.
The power brands,
Mhm.
the well-known established products, are a big driver, growing at 18%.
What really jumped out at me was the e-commerce boom they're experiencing, over 30% growth year-over-year.
Wow.
They're definitely capitalizing on that shift in consumer behavior.
It's a savvy move.
Yeah,
E-commerce gives them a direct line to consumers bypassing traditional retail.
makes sense.
Plus, it provides a treasure trove of data on consumer preferences, informing their product development and marketing strategies.
Yeah, they seem serious about making e-commerce a profitable channel,
Yeah.
mentioning pricing, product mix, and investment optimization as key areas of focus.
And that's crucial in the e-commerce world.
Yeah.
While the growth potential is huge, it's also intensely competitive.
Right.
They need to walk that tightrope between scaling up and maintaining healthy margins.
Now, shifting gears to something increasingly important across all industries,
Sure.
sustainability.
Okay.
You flagged their FY24 sustainability report.
Yeah, it's impressive to see that they're not just paying lip service to this. They're setting concrete, measurable targets. For instance, they're aiming to significantly reduce their greenhouse gas emissions across the board,
Okay.
what they call Scope 1, 2, and 3.
Scope 1, 2, and 3 emissions, what's the difference?
Oh, good question.
Yeah.
So Scope 1 covers direct emissions from sources they own or control,
Okay.
like their manufacturing plants.
Got it.
Scope 2 is indirect emissions from purchased energy, like electricity. And Scope 3 gets more complex. It covers emissions from their entire value chain,
Wow.
like suppliers and transportation.
So they're looking at their entire footprint, not just what happens within their own four walls.
Exactly.
Impressive.
And they've gone the extra mile to get validation from the Science Based Targets initiative.
Oh, wow.
This means their targets align with what's needed to limit global warming to 1.5 degrees Celsius.
Okay.
This level of commitment is pretty rare, especially for an Indian pharma company.
So they're taking sustainability seriously.
They are.
But what about their financial health overall?
Yeah.
How's their balance sheet looking?
Solid overall.
Okay.
They have a net debt of 4,235 crore.
Oh.
But they're emphasizing their goal of achieving a 1x net debt EBITDA ratio by FY30.
Okay. So what does that mean?
That means they want their earnings to be equal to their debt.
So they're focused on paying down debt
Yeah.
and improving their financial stability.
Yeah.
Sounds like a responsible approach.
It is.
They're performing well across segments,
Yep.
embracing sustainability, and keeping their finances in check.
Uh-huh.
So what's next for Piramal Pharma?
Good question.
Where do they see themselves heading in the future?
They've got ambitious goals.
Okay.
By FY30, they aim to be a $2 billion plus revenue company with a 25% EBITDA margin.
Wow.
That's a significant jump from where they are now.
That's a huge leap.
It is.
But they seem confident they can get there.
Yeah.
They're definitely not resting on their laurels.
Not at all.
They're actively shaping their future through strategic investments and a clear focus on growth and profitability.
Absolutely. They're not just trying to ride current trends. They're aiming to be at the forefront of the pharmaceutical industry by investing in cutting-edge technologies and developing new, differentiated products.
Exciting.
It is exciting.
So they're performing well, they're investing in the right areas, and they're adapting to the changing landscape.
Uh-huh.
It's definitely an exciting time for Piramal Pharma.
It is.
But to really understand the full picture, we need to look at the potential challenges and opportunities they might face as they pursue these ambitious goals.
For sure.
More on that after a quick word from our sponsor.
We're back diving deeper into Piramal Pharma.
Okay.
Before the break, we were talking about their impressive performance and ambitious goals.
Yeah.
But every company faces challenges.
Right.
And opportunities. So let's explore those.
Let's do it.
Starting with the challenges.
Okay.
The pharmaceutical industry is incredibly competitive.
Oh, for sure. They're not the only ones vying for a piece of the pie.
Right.
Especially in that booming CDMO space.
Yeah, you've got big established players and smaller, nimble competitors.
Right.
All hungry for growth.
So how does Piramal stand out in that crowd? What's their edge?
Their diverse portfolio is one advantage.
Okay.
It gives them a certain resilience.
Uh-huh.
If one segment faces headwinds, they can potentially offset that with strong performance in another.
Like a diversified investment portfolio, spreading the risk.
Precisely. Second, their focus on innovation, particularly in the CDMO and CHG segments, allows them to offer specialized higher margin products and services.
So they're not just competing on price.
Yeah.
They're competing on expertise and cutting-edge capabilities.
Exactly.
And their commitment to sustainability could be a big differentiator, too.
Absolutely. Consumers and investors are increasingly looking for companies that walk the talk on environmental and social responsibility.
Yeah, it's not just a nice-to-have anymore.
Right.
It's a must-have.
It is.
So those are some of the potential headwinds and how Piramal is positioned to navigate them.
Yeah.
What about opportunities?
Okay.
What are some of the tailwinds that could propel their growth in the coming years?
Well, the global pharmaceutical market is expected to continue growing, driven by factors like an aging population, rising healthcare spending in emerging markets, and the increasing prevalence of chronic diseases.
So there's a rising tide that could lift all boats.
Yes, but Piramal is well positioned to capture more than their fair share of that growth. Their focus on the CDMO segment puts them in a sweet spot. As more pharmaceutical companies turn to outsourcing to reduce costs and focus on their core strengths.
And they're not just passively riding this outsourcing wave. They're actively building their capacity to meet the growing demand, like we talked about earlier.
Yeah.
That investment in sterile fill-finish capabilities is a prime example.
Yeah. Exactly. It's a high-growth area with limited capacity. And they're making a bold move to become a leader. Beyond CDMO, their move into differentiated and specialty products within the CHG segment also presents significant growth opportunities. It allows them to tap into less crowded, higher margin markets.
Moving from volume to value.
Exactly. And their expansion into markets outside the U.S., particularly through their facilities in India, opens up even more avenues for growth.
lots of potential.
Yeah.
But they're also operating in a complex and ever-changing regulatory environment. How might that impact their business?
That's a crucial point.
Yeah.
The pharmaceutical industry is heavily regulated.
Right.
And navigating those regulations can be a major challenge, especially for a global company like Piramal.
Makes sense.
They have to stay ahead of the curve,
right,
and ensure they're in compliance with all the rules and regulations in every market they operate in.
And it's not just about meeting current regulations. It's about anticipating future changes and adapting accordingly.
Absolutely. And that's where their strong track record of quality and compliance comes in.
Yeah.
They've had a good track record with regulatory inspections, which builds trust with their customers and gives them credibility.
So it's not just a box-ticking exercise. It's a core part of their business philosophy.
Right. And they're not just relying on manual processes. They're investing in technology and automation.
Makes sense.
To enhance their quality and compliance processes.
Yeah.
Which reduces the risk of human error and helps them scale their operations more efficiently.
So using technology not just to innovate, but also to mitigate risk.
Exactly.
Smart move.
Definitely. And speaking of technology, it's playing a major role in their India consumer healthcare business, too.
Yeah.
Their embrace of e-commerce is a perfect example of how they're adapting to changing consumer behavior. They're not just selling online. They're using data and analytics to understand their customers better and personalize their offerings.
So they're becoming a technology-driven consumer products company.
Yeah.
As much as a pharmaceutical company, they're recognizing that the lines between industries are blurring.
Right, and they're embracing that change to reach new customers and tap into new markets.
So it seems like Piramal Pharma is firing on all cylinders.
They are.
They're performing well, investing strategically, adapting to change.
Yeah.
But let's step back for a moment and consider the broader implications of their success.
Okay.
What does their growth and innovation mean for the pharmaceutical industry as a whole?
That's a great question. Their success underscores a few key trends.
Okay.
First, it highlights the growing importance of specialization and differentiation in the pharmaceutical industry.
Okay.
Companies that can offer niche products and services are better positioned to compete.
It's not just about being big.
Yeah.
It's about being smart and focused.
Exactly. Second, Piramal's commitment to sustainability sets a positive example for other companies in the industry. It shows that it's possible to be both profitable and responsible.
Right. It's a win-win, good for the company.
Yeah.
The environment and society as a whole.
Absolutely.
And consumers and investors are noticing too.
For sure. And finally, their embrace of technology, both in manufacturing and their consumer-facing business, highlights how innovation can transform the pharmaceutical industry.
Right.
It's not just about developing new drugs, it's about improving efficiency, quality, and the customer experience.
Piramal is certainly a company to watch.
They are.
Now let's shift gears and talk about what their success means for you, the listener.
Okay.
We'll explore that right after this short break. Welcome back to the Deep Dive.
All right.
We've been taking a close look at Piramal Pharma, their performance, their strategy, and the trends shaping their future.
Yeah.
But let's bring it back to you, the listener.
Okay.
Why should you care about what's happening with this company?
Well, I think Piramal's story offers some valuable insights. First, it reminds us that innovation isn't just about inventing new drugs.
Okay.
It's also about finding creative ways to deliver value to customers.
Right.
Whether through specialized manufacturing, differentiated generic products, or a seamless e-commerce experience.
So they're showing that a company can succeed by being kind of a master of many trades.
Yeah.
As long as those trades are strategically aligned.
Exactly. And their commitment to sustainability is another key takeaway. It demonstrates that businesses can do well by doing good. They're proving that environmental and social responsibility can be a competitive advantage, not just a cost of doing business.
And this lesson applies across industries, not just pharma.
For sure.
It's a good reminder that consumers and investors are increasingly rewarding companies that put their values into action.
Absolutely. And finally, Piramal's story underscores the fact that the pharmaceutical industry is constantly evolving.
Right.
Companies that can anticipate and adapt to these changes are the ones that will thrive in the long run. Yeah.
It's a dynamic and exciting sector.
Yeah.
Full of opportunities for those who embrace innovation and challenge the status quo.
So as we wrap up this deep dive into Piramal Pharma, here's a final thought for you to ponder.
Okay.
As the pharmaceutical industry continues to evolve, what role will companies like Piramal play? in shaping the future of healthcare?
Yeah.
Will they remain mostly behind the scenes, providing essential services and products to other companies?
Right.
Or will they step into the spotlight and become more directly involved
Interesting.
in developing and delivering healthcare solutions to patients?
That's a question worth considering.
Yeah.
And I think the answer will likely be a blend of both.
Okay.
Companies like Piramal will continue to play a vital role in the pharmaceutical ecosystem, providing the expertise and infrastructure that drives innovation.
Right.
But I also believe we'll see them become more visible and influential in shaping healthcare's future as they leverage their capabilities to develop and deliver new and innovative solutions. Exciting stuff.
It is an exciting time to be watching this space.
It certainly is. Thanks for joining us on this deep dive into Piramal Pharma.
My pleasure.
Until next time.